The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right, everybody, welcome back. Good morning. Hope everyone is doing well. Happy Tuesday to you. And markets are moving this morning. If you're looking at gold and silver, my goodness, we actually have some serious volatility coming into the picture. Just take a look at the one-day percentage move on gold. You got a down 3.5% move. And we've been talking about, when it comes to the volatility of gold, very, very high, right? Gold volatility is very high. We found a chart, what was it? GVZ. This is an index that shows the volatility, implied volatility of gold. It's kind of like the VIX is to the S&P 500. The GVZ is a gold volatility index, which can be really interesting to see. I mean, what this is telling you is that the market, which has done a pretty good job at this, has been expecting large moves. You can see today we're getting a large move, which is in line with expectations of the VIX. Now, I'm sorry, the GVZ. Now, what I should mention about gold volatility is that gold volatility does not necessarily mean it's gold volatility to the downside or to the upside. It just means that the options market is expressing significant implied volatility. But to see a gold move down by 3.6%, that is a very large candle, to say the least, when we look at the daily chart. In fact, that is the biggest candle that we have actually had so far in recent times. If the candle were to close like this, if you were to get a close that looks similar to this, that would be the largest candle body that we have had close in a very long time. Despite all the upside momentum, you can see if this were to close like this would be your classic bearish engulfing signal. But it's a bearish engulfing signal in the context of an uptrend. So would I take that as a short side setup? No, not really. But it is still, nonetheless, it would be a bearish engulfing candle, which could potentially suggest maybe you have more room to pull back. Down 3.7% on the day here is gold. I mean, that is a substantial drop in gold prices. Kind of all at once here, we see pretty heavy selling. I do want to just kind of highlight, however, that this is not Armageddon for gold. I know that if you're trading like the 15-minute chart, you're like, what's going on? Oh my gosh, gold is crashing. Just look at the daily chart and you'll kind of get the full picture. You've melted up to the upside. Like, we are very stretched to the upside, and we're having a down day. If you're chasing, like, yes, this is painful. But if you are, kind of waiting for pullbacks, you're like, oh, heck yes, give me a little bit more of that. Because what we can see here is gold is trending higher, 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 and has not even come yet to the 20-period moving average. So please understand, is gold, still stretched? I would say yes, it's still expensive relative on a price action basis, not necessarily in an absolute, kind of worldly basis. I think gold is actually still cheap on a big picture. I think gold does go higher in the bigger picture. But price action in the here and now, we are still well away from getting just to that 20-period moving average, which I think is a very healthy thing for price to do. Like if you're a gold bull, if you're a true gold bull, like you want to see this thing run for the next few years, let's pray for some dips. Let's pray for further downside. Let's hope that we get another 5-10% pullback to help make this move more sustainable. Like if you're truly bullish on gold, let's get a little bit of the froth out of here. People who chased, people who, leveraged in on gold, people buying in the streets. Let's let that thing pull back a little bit more. I'm not pleading with you because none of us can control what happens with the price of gold. I'm just saying that rewire your thinking. If you're really truly bullish, you should probably now I know if you're like day trading, you don't want it to go down if you're bullish. But what I'm saying is like if you're truly like a swing trader, a bigger term picture trader or investor, gold coming down is a blessing in disguise, right? You want to see prices come down to give you sort of that healthy reload to what is a really strong trend. We talked about this in the NASDAQ too, right? NASDAQ, S&P 500. Do I think we completely wiped out the froth that's in this market? No. I would have welcomed further drops, but we did get a 50-day moving average retest. That's pretty healthy. We call this a healthy trend when you get waves, right? When you get up, down, down, right? Like you can see, you want pullbacks. You want healthy corrections. To be completely transparent, I think the NASDAQ could still use some further downside drops. If you're a crypto believer, right? You don't necessarily want, if you're fully in and you're really just wanting to shoot for the moon, then sure, you want moonshot moves, right? But for people who really want the trend to last, it is my opinion that you should actually pray for pullbacks. Like you should hope that you do get periods of consolidation, sharp moves lower to scare out the weak hands. You want that to happen. Because when something moves in a straight line, oftentimes the next move is a straight line down, right? So gold has been in a straight line. So we've talked about this many times recently. Yesterday in my video, I mentioned that, gold looks due for a pullback. Not something I would short, and I don't want to take credit for saying, oh, I told you gold is going to pull back, because it hasn't even pulled back yet. Like, understand, this is not even a pullback yet. You're just pausing. Like a pullback, I know it feels like a huge crash if you're looking at the 5-minute or the 15-minute chart. I get that. What I'm saying is, like, if you're looking at a big picture, the story of gold, we haven't even pulled back yet. Pullback I would define by at least getting to the 20-period moving average. At least. A real pullback, a correction, give me that 50, give me that 100-day moving average. And now you're talking about some discounts in an uptrend. You see what I'm saying? That's all I'm saying with gold, with NASDAQ, with all of these charts. When you get one directional moves that go on for too long, the worry becomes a melt up or a bubble that can kind of turn into a crash. That's been my worry with gold here recently, is you've had just a one directional move and it's started to paint a picture of like, what's going on here? Are we going to see the world fall apart? Like, why is gold going so crazy? Like, you almost want a couple days, maybe a 2-week, 3-week, 4-week period of gold prices consolidating or coming back. And then I think you have a healthier bull trend to continue off of. Silver's down 5% today. Silver actually is tagging. Oh, didn't quite. Never mind. Very close to tagging the 20-period moving average. So the 20-day moving average, we've almost tagged it. I think at the very least, that's a healthy start to a pullback. And maybe that's all you get. Silver's in such a monster trend. That might be all you get. But I think it would also be really healthy if you did get that 50-day to 100-day retest in silver prices. I don't know. What do you guys think? Is this, let me ask in the audience, do me a favor, gold, just drop a comment. Are you bullish? Are you bearish? Let me know. Do we have bulls or bears in the room? Do you think gold is coming down? Do you think gold is a buy? Give me some feedback on that. I'm just curious what you guys think. So risky to go sell gold now. Yeah, I wouldn't. So I'm asking you guys, it's kind of not a fair question, because if you want to ask me, Nick, are you bullish or bearish? I would say bullish, but not at this price. Like, I'd say bullish if you gave me a pullback, which is not really a fair. If I had to say something, like if I had to say, do I think gold is bullish or bearish right now, this second, if I had to take a buy or had to take a sell, it'd be a buy. It would be a begrudging, unhappy, pouty buy, but I wouldn't do it. Like, I don't like the trade setup at these levels. I think you're still overextended to the upside, but my directional bias would still be bullish. Edgefinder's also got a bullish reading on gold, although it is only a +5. And we've been talking about this a lot recently. This score of +5 on Edgefinder. Where's gold? Is something? Hold on. Let me make sure this is. Maybe we drop back down to 3. Hold on. Okay, maybe not. We have a 3. So let's just say, even if this thing was bullish, that would not mean I go and buy gold at the second. Like, I still need healthy corrections, healthy pullbacks, etc. I think it'll range between 4,100 and 4,400 for a little while. 4,100 is right around here. 4,400. Yeah, I could see that. So here's another thing for you guys to think about. Even if you're bullish on gold, like, you could also get a correction in time. I don't know if you guys have heard this expression before, but let's just say you're looking at, well, let's stick with our moving averages. Let's just say you're saying, okay, I want a healthy correction to the 50-day moving average. There is a possibility that a correction in time could take place. What I mean by that is, instead of a massive one-directional drop down to 3,700, which would get us to the 50-period moving average in a hurry, you can also have the possibility of a correction in time. Meaning, let's say prices chopped around here, as our friend Jack just said, he thinks that might take place. What that could do is it could give time for our moving averages to catch up. We call this a correction in time. And I actually think that's a very distinct possibility for gold. In fact, I could see that being the most likely scenario for gold as well. Like, let's say you're waiting for the moving averages to get retested. It's very possible that what could actually happen is not that price drops and crashes to get back to those levels, but rather that the moving averages catch up to a consolidation in price. Right? I think that's the very least thing I'm waiting for. So, am I going to do anything at these levels? No. But I am going to watch gold. And if we can consolidate and prices can kind of chill out for a little bit, even if it's just a move back to 4,000 in the next few weeks, correction in time. I like that a lot. That's the most likely scenario. Yeah, I'm with you on that. Like, I would be surprised if gold just keeps going without any more of a pullback than this. Could happen. I mean, my gosh, how many times have I thought we might be chilling out and then we just keep going higher? But this is why we don't short, right? My judgment have said probably due for a pullback, right? But that doesn't mean I short the gold market. And thank goodness I have not taken one singular short position against gold, because everything shorting gold has been a loser if you've held it for any amount of time. If you've taken an instant profit, like a really small, quick profit, then that's different. But we don't really scalp or aggressively day trade on this show. We talk about the big picture. We look for the big moves. And, you know, I think the bigger move for gold is maybe consolidation for a little bit. Like, maybe we just chill out for a month. Not exciting necessarily, but you know what else supports that? Ballout says that's the most likely move. You know what else supports that? If you're a regular, you know exactly where I'm going. History supports that. Not opinions, not Nick's gut feeling, not Ballout's gut feeling. History. if my chart would load here. There it is. History suggests right now, if you were just to follow 10-year averages, gold would go slightly lower and just consolidate sideways for the rest of this year. Chart shows gold corrects for years. Yeah, I mean, Bollett's got the edge finder, so he's got the secret weapon. Look, it's really rare for prices to move in one direction for a very long time. And even if you are bullish, I think it's probably a healthy thing that gold waits for some consolidation and chills out a bit. And that's what history suggests based on just seasonality. Just on seasonality. I mean, there are other factors at play here. I know people who are, uber bullish will say central banks are buying every single day, but that has been the case for years, by the way. And then you might say, well, no, China's really ramped up their buying. Yes, that's true, but they've also been ramping up their buying for multiple years. And that does not mean that it can't have a price correction in the meantime as they continue to buy. Like central banks buying does not mean price goes up infinitely. Central banks buying, there's still other forces at play. Central banks play a big role, but there's also a ton of speculative buying that's going on. And if that cracks, if you get, the crowd spooked a little bit, that can really truly cause. And when I say the crowd, I am including like hedge funds, portfolio managers. A lot of people are chasing gold right now. You get a little bit of a story that shakes that. Yeah, you could consolidate or go lower for a month and it would still be bullish. Like what I'm saying is, even if you consolidated for a month or 2 months or 3 months, consolidation is healthy. That's what led us before this huge run up. We had a sharp run up during the tariff worries. We consolidated for a few months, kept knocking on the door of this high. And when it was ready, gold went. Gold's good for swing trades. I love swing trading gold. It's definitely one of my favorite things to trade. In local shops, they have 4 sellers for 1 buyer of gold. Aaron, you are probably onto something with that. I watch a lot of precious metals dealers on YouTube, and that does seem to be the trend. A lot of people are actually coming into shops to sell their gold. Now that does not they could be completely wrong doing that. People have been doing that for a while, by the way. A lot of shop owners have talked about like, oh, people are rushing in to sell their gold because price is high. And everybody who sold their gold has sold so too early. So it doesn't necessarily mean like, people know the top. The real mania would be which we've kind of started to see is if people start to rush to go buy it at the new highs, right? That's actually been going on. I've been talking about that in my videos. There's been like pictures leaked of people literally lining up at gold bullion shops to buy gold or to sell it. I guess you don't really know. If you just see a line of people out the door, it could be people selling their gold too. But in history, there's been many times when gold run-ups happen and shops are taking in, they have to, so I don't know exactly, and I don't want to like try and give you an exact date or time, but I've heard from those types of channels, the gold bullion dealer people, talk about times in history where shops had so much activity going on. Physical gold and silver was coming in the door so fast that they had more buyers than sellers in certain moments. And what they'd have to do is they'd have to work with people who wanted to sell them their gold first so that they could turn around and sell it to the buyers walking in the door, right? Because they were out of gold and physical silver. I actually think if you're a gold and silver trader, you should definitely, I don't have a channel like this, obviously, but you should watch some of the gold bullion channels where people will go into shops and talk about like what's going on in gold and silver. I love those sort of videos. I watch a lot of silver stackers, and one of my favorite channels is Silver Dragons. Check out Silver Dragons on YouTube if you want some physical gold and silver commentary. I find it really boots on the ground stuff for just like the physical gold world. Anyways, kind of sidetracked. I don't know how many people here are interested in gold physical, silver physical, but VIX jumping up about 2% here today, still coming down quite a bit from those highs. Panic selling took place. We've seen a little bit of cooling off on that. At the same time, S&P 500, NASDAQ, a little bit of red here. NASDAQ is sitting just shy of all-time highs. You've got about 10 minutes before the U.S. stock market opens up. And I wanted to also just make a quick plug here. I know I mentioned the seasonality. So here's some heads up. If you're a regular, we've got 463 people watching the stream right now between all the different platforms that we're streaming on, Twitter, YouTube, and our Telegram channel. So starting tomorrow, we are going to be doing a free week access to the Edge Finder. It is completely free to use for a full week to everyone who's here watching. I'm telling you this now because in the past when we've done this, we've had such a flood of people who want to use the Edge Finder at once that it breaks our system. I'm not even kidding. Our system emails everybody access, and our system has been overwhelmed in the past. I'm just telling you this because I'm like trying to avoid this happening again. We've had so many people who want to use the Edge Finder, so many people who want to try it out during our free week, that I want to tell you guys this so that you can make sure you get access. If you're here with me live, do this right now. If you want to try it out for a week for free, step 1, join the Telegram channel. We're going to be dropping a link to access the Edge Finder free version. I'm sorry, not the free version. We are giving the full access away for a full week. If you want to try it for a free week, listen to these instructions carefully. Because again, like I said, our system has been overloaded in the past. When we do a free week, there's so many emails that get sent, our email system flags and we blow up. Okay. So it's kind of like, let's avoid that. So here's how you can make sure you be one of the first people to get access and you can get squared away and you can start using it as early as today or tomorrow, depending on when we drop the information. Stockbox is also going to be free for a week. So don't you even worry. We're doing both. If you want to try our stuff out, here's how. Step 1, join the Telegram channel right now. We're going to be dropping the link here. So people who get into this, if our system blows up, the easiest way that you're, not one of the people who gets left out of this is to join our Telegram. We're going to be doing some drops there. We're going to be giving free access to Edge Finder and Stockbox in our Telegram channel. Scan the QR code if it's easier for you. If you have your phone, just literally point it at the screen. Join our Telegram, and we will be dropping some information on how you can try out the Edge Finder for free and the Stockbox. Both are available for people to try out starting tomorrow. So again, take a second. I'm telling you this right now because in the past, like I said, people have missed out on the chance to join because our system has been flooded by requests to try the software so aggressively. And this is a flex right now. People love to try our stuff so much that they blow up our system. But yeah, there's your chance. So with that said, we have gold seasonality in play. We've talked about that, where we think maybe we get some consolidation on gold. We're starting to see that. Let's see, where's the update? Gold down 3.4%. That's a really big one-day move. Really big one-day move. Same thing with silver. Silver's down 5%. Let's take a look at Japanese yen's down this morning. The dollar index is up. That might be contributing a little bit to this. And I asked this earlier. We asked about gold and silver being bullish, bearish. What do you guys think about the dollar? DXY, are you bullish or bearish on the dollar? Just let me know. Drop a comment. Let me know what you think on dollar. Personally, I still think the dollar has more upside. So when it comes to the dollar, part of the reason for this, part of the reason dollar CAD is getting a really strong reading is that we have, let me just search it. USD CAD is seasonally very strong in the end of the year. So I thought that was kind of interesting. It's following suit really well this year so far. Getting some mixed sentiment here, bullish, bearish for end of 2025, bearish. Interesting. Yeah, I mean, part of the reason I like it is I think that from a seasonality perspective, dollar looks strong, but it's also because on the economic surprise meter, dollar is still a relative outperformer. So we have, actually CAD has bounced up as more bullish recently. We got to take a look at that. Dollar looks pretty decent in terms of economic data, although we are still very much in the blind. So this should come with an asterisk, to be honest, because US economic data has been delayed due to the government shutdown for a while. So this could change dramatically when we do get that data. We get CPI reports on Friday. That will be very interesting to see what that does. But yeah. What's going on with the Canadian dollar? Why is that getting such a strong score? So CAD CPI this morning. Did we get CAD CPI this morning? CAD CPI came in. PPI also came in higher than expected. 2.4% for CPI, 5.5% for PPI. For Canada, is the CAD a little stronger today? Let's take a look. USD CAD. A little bit stronger here, at least on the day. CAD strengthening against the dollar. CAD yen. CAD Swiss. Very interesting. So CAD is a little bit strong here this morning off of some higher than anticipated inflation data. Nick, you've been fighting my $1.95 campaign from 110. Why? Bala, I know you're on your bearish campaign, but at the end of the day, my bias for stuff has nothing to do with anybody else's commentary. Nothing against you. I mean, you might be right, but you know, I think I would have gone mad a long time ago if my bias on something was based on the YouTube comments, because then my eyes would just be crossed. Because at all times, there's people who are bullish and bearish on everything in my comment section, right? But you might, I mean, dollar might longer term maybe headed back down to the lows. But in my opinion, for now, dollar index stays supported. I've been long since around this area here, early October. And if something changes, then I'll change my tone. But I when it comes to like DXY, right? Is 95 a possibility if conditions change? Sure. But I'm really like not willing when it comes to an idea that I have. I'm never willing, my expression for this is, it's not my expression, but the expression that I like for this is hold strong opinions loosely when it comes to trading. So if I think the dollar is moving higher, but the market starts to smack me in the face and tell me I'm wrong, then I yield, right? So I'll make a decisive decision. Like, I think the dollar is going to push higher. But if it doesn't push higher, something changes and the economic data starts suggesting bearishness, then we adapt. What I think is the bigger danger would be to say, I know that dollar is going to 100. The DXY is going to go to 100. It's going to do it. Trust me. And if I just kept dying on that sword, that could get you into a lot of trouble. For me, when it comes to trading, it's all sort of educated guesswork. Right now, I think the dollar could go to 100. If it doesn't, we change, we adapt. But we never sort of like having the humility to be like, oh, I was wrong, change in direction is a superpower in trading, where most people think like, I got to be super stubborn and think like, if I'm bullish to the end. It's going to happen, right? Whereas I think real successful trading relies on being very open-minded to the data that's in front of you. Like if the US economic heat map starts turning red for the dollar big time, I'm bearish. Like I'm not overly stubborn to the point that I'm going to go down with the ship on an idea. Like I'm going to adapt to what the data is telling me. I'm loyal to the data. I'm not loyal to, my gut feeling on where I think it's going, right? So we'll see. But for now, same thing with indices, right? Indices look bullish until proven otherwise. I had someone comment yesterday. They were like, they pointed out that I bought the dip and it worked this time, but eventually the dip won't work. And they're very adamant about that point. They're like, it's in a bubble. It's all going to come crashing down. And at some point, the dip buying is not going to work, and you'll see then. And I agreed with them. I was like, yes, you are correct. The dip buying mentality of this market is pretty feverish in the sense that every dip is getting bought so aggressively, you're hardly getting a dip, and then price is rallying. And I agreed with them in the sense that that will not go on forever. But you can also acknowledge that fighting that theme and trend is hurting people bad too. People are saying, well, the dip will change, and they're assuming that the next dip is going to crash. They've been getting destroyed in markets in the last few years, right? Because if you've thought like during this whole time, like, oh, it's going to dip and it's not gonna rally back this time, that's been a terrible strategy this year. This year, the trend is your friend. And until that theme changes, the trend is your friend. So if we see a dip happen, and let's say I buy again, and I have my stop loss in place, and let's say they're correct this time. They finally get the dip that keeps dipping. They're calling for that. Then I'm with them. I agree. Dip didn't work. We stop out and we adjust. But the bigger danger, in my opinion, is to assume it's going to be different before the market changes. You see what I'm saying? Everybody wants to predict what the market's going to do next before it starts doing that. But oftentimes the easiest thing to do is to follow the market's trend. So with gold, is this time different? Are we going to get the true market sell-off? Maybe, but until then, in my opinion, dip should be bought. Where I buy that dip, which I talked about earlier, and I won't go over this again completely, but where I buy that dip would be at least a pullback to 39.50. I think you do need to still get a good, healthy pullback before we can justify looking at longs, in my personal opinion. But again, if we were just looking at this chart, this is the only dip you're going to get, right? That's that, like, but I don't assume that's going to, certainly happen. Like I just think that the healthy correction, the healthy dip, even if you're going back from this September point here, 50 to 61.8% retracement, that dip, my innocent till proven guilty, right? The trend is your friend. Nick, you should make educational videos on your stocks channel. I would love to do more, but the problem is I'm doing so many videos right now between all of our stuff that we're doing. I just don't have the bandwidth. Right now, I'm sticking to one video a week on the stocks channel, but I'm just filming too much stuff. Maybe someday I would love to. Anyways, with that said, guys, we are going to go ahead and do something here. We're going to pass over the stream to our next show host. It's Forex James. Before we do that, just a reminder, we're going to be doing free week for the Edge Finder. Information about how you can get access to that when it drops will be found in our Telegram channel first. If you want some information about that, join the Telegram using the QR code that you see on your screen right now, or the link that's just been dropped in our live stream chat. Simply fill this or just click this link to join and stay up to date there with what we have going on in the Telegram. We will be giving out free access to everyone to the Edge Finder for a full week starting soon. Up next, you got Forex James. Stay tuned, coming in just after this. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. How are you guys doing? Happy Tuesday. Hope you're well. Hope you're having a good start to the week. So I did the forbidden move yesterday. I shorted gold. I made just under 600 pips on it. It was quite a simple trade, actually. Stop loss above the high. So I'm going to explain why I did this, because it wasn't a a gamble or a random trade. It was based on data. So I want to share that data. And I think we've discussed it quite heavily last week as well. But for anyone that wasn't here, I'll explain it again. So gold has a 9-week candle pattern that is only displayed a few times in history. But when it does happen, the results have been the same almost every time. I think there was one time where the next day wasn't a bearish day. However, everything else has always led to downside on gold, and I'll show you the data in a second. But in 2006, we have this 9-week candle, 9-weekly candle pattern, and then we have a almost 25% move to the downside. We had the same thing in 2020, 9 weekly bullish candles, reversion back to the downside, and now we have 9. Oh, let me just fix the chart. 9 weekly candles. And we're seeing them move to the downside. But the main theory or the main sort of thought process I had with this trade was that looking at the previous times that we've had these 9 weekly candles, the 10th week has never broken above the 9th, or the weekly candle. So the 10th weekly candle has never broken above the 9th. So I went short right here with a stop loss just above this high. It was very, very tight. Because again, if we did get this 10th candle or the current weekly candle, which is the 10th, breaking above the 9th, that would have pretty much wiped out the historical pattern there. So that was the thought process. It did almost tag me out. I came very, very close to getting stopped out. And then earlier this morning, I managed to get out quite nicely. Could have held it in hindsight, but you know, it's one of those trades where it was very low risk. It was a little bit of a I'm going to call it like a test position, if you will. And the trend is still bullish. I'm still fundamentally quite bullish on gold, so I didn't want to push my luck really too much. I was quite happy to just take the money and get out of the market. So just briefly, again, I've shown this already on stream last week, so I'm not going to go into it too much today. But this is the data. So you can see 1970, after we've had 9 weekly bullish candles, we were bearish up till 2 months later. We had a 2.47% drop. January in 1980, this was the one outlier that I mentioned where we actually moved up 1.66%, followed by a 32.2% drop. 2020 was 10.32. Oh, no, sorry, 2006 was 10.32. 2020 was 7.27. And then obviously we're in 2025 now. So that was the theory. Then we've also got seasonality as well that is playing for gold. Let me just pull this up for you. Monthly seasonality. Is it annual or monthly? Hold on, let me just double check. Gold here. Yeah, so here on seasonality as well, we do have a bit of a dip, which did slightly support that short idea that I had. Now, was it the best trade? Probably not, because it didn't really follow my technical strategy, but I did follow data, so I'm gonna consider it a reasonable trade to take. But yeah, that's pretty much it from my side. I just wanted to get that out of the way. So hello everyone. OT, I'm not going over lean hog futures. I don't know what the ticker is. I don't know what type of sick kick you get out of trying to get me to look at these crazy markets. Sluggy, hello. James, as a candle, can you explain how you are today? I'm feeling a bit like a doji today. I'm in a good mood, but I'm very tired. So it's like there's that battle either side. So I'm feeling good mentally, but physically, I could do with going back to bed for a bit. It seems you jinxed my pound Swiss. Apologies. Yeah, you did. That's all your fault, by the way. You need to send me your email so I can invoice you for that loss. Can you check hot roll steel futures? I'll be honest, I had no idea that was even a thing, to be honest. Orange juice, no. Did I get stopped on pound card? I didn't take pound card. That's something I was actually going to go over with you today. So pound card, I was looking at this level last week, and then on the weekend, I was re-evaluating the trade, and I realized rather than being aggressive here and not waiting for the fib, I just need to look to the left, because I wasn't doing that. And it was one of those things where I just wasn't really paying that much attention. And luckily I didn't execute on the idea, because I would have been pretty close to stopped out, if not stopped out already, if I did take it. So I was actually looking objectively and saying, okay, price, all it has is a break and retest. Yes, that looks good for Edge Finder's bullish, but I just can't really justify being a buyer yet. So I waited for this, which has happened now, which is a touch into the fib, rejection off the previous high here, also coming into the moving averages and sort of just rebalancing price a little bit. So if we can see buyers stepping in, maybe we can see this H4 candle turn bullish or flip bullish, see something happen here, then yes, I will probably buy the pound CAD. No, it wasn't on. Well, actually, I suppose I'd say it was a mix of seasonality and data, not just seasonality. No. So again, I already showed you the data. When we have those 9 weekly candles, statistically, gold is going down. Obviously, I'm not saying it has to happen, but every time it has happened, it has done the same thing over and over and over. So of course, I'm going to try and capitalize on it. I think it would be kind of silly to completely write off going short just because of something else. When again, that thing that has happened every single time is now happening again, or to at least try to get something going. So with gold, I do think we could come down lower. Now, I'm not a bear. I'm not trying to say this is the top of tops and we're now going to go, negative 10, 15, 20% on gold. But I am sort of leaning towards being a seller. I think there's obviously, again, we've got that 9 weekly candle pattern. We've got a very, very extended market, especially on higher timeframes. I don't think it's unreasonable to expect some sort of profit taking or something to happen in gold to sort of just rebalance a little bit. So I would be looking for some sort of bearish signal, whatever it may be. Maybe a 50% retracement of this move and then a continuation lower. Maybe it'd be a break and retest here. I really don't know. If we see something, I might attempt another short, but I'm not married to the idea in any way. If we get it, I'll take a go. If not, that's completely fine. If we continue higher, then I'll be looking to be a buyer. But I think the narrative that we've had on gold over the past couple of weeks of buying dips, I still think that's completely reasonable. But this, in my view, isn't a dip. This is just one candle. A dip to me would be down towards sort of 3,900, 3,700, 3,700 to 4,000 would be sort of my dip buying area. Anything above that, in my view, isn't a big enough dip. OJ Simpson futures. Sub James, am I wrong if I think we are having a weekly pullback on gold and then after that you can look for buys? You're not wrong for thinking anything. You can expect or you can think whatever you want to think, because no one knows. You could say gold could be at 7,000 next week. I could say that's a ridiculous thing to say, but it could happen. Anything can happen in the markets, but it's more about probabilities. So I would say, again, I know I keep repeating this, but this is sort of the main thing that's driving my idea right now is this 9 weekly candle pattern. Again, it's happened every single time. So in my mind, the probabilities now are that gold is going to be lower in the next 1 to 2 months. But please don't mistake that for me saying that I'm calling the top. I definitely don't want to be that guy that is saying that we've now topped on gold and we're going to crash, because I'm very open-minded. That could not happen. This is the first time I saw an H4 double bottom on gold. We're going to $12. I think if gold goes to $12, there's going to be some serious trouble. Can you imagine everyone trying to buy dips on gold? If it stops me out again, I'm going to send James an invoice. What are you sending me an invoice for? What have I done? Changed your beard style? Well, I like this style. I've had it a couple of times, but I just don't really maintain it. I'm not great at doing my hair and beard and things. I tend to let it get quite shabby, and then I'll fix it when I start to look homeless. It's not good. I should really care a bit more about how I look. But anyway, the S&P still in my long positions. I've trailed the first 2 positions stop losses. So the first one down here, or the lowest entry, is now at the second entry. And the second entry is at break even. So if we do see some sort of drop, at least I'll be pretty much break even. I'll take a very, very small loss. It'll be close enough to break even for me to not really care. But I think the S&P does have room to continue. I think that nothing has changed since we have had this run. There is pretty much no change. The only thing that threw it off was the US-China debacle that we had. We've still got no news out of the US regarding their shutdown and incoming data. We do have inflation, as far as I'm aware, coming out on Friday. But other than that, earnings are still relatively strong. Seasonality is still good. The edge finder is still bullish. So I will continue to stay in longs until I see a reason not to. I might trim some of the positions. I might trim these two higher positions if we can start coming a little bit closer into this high. And that way I'm just taking some off the table. But generally speaking, I'm still bullish. So ideally what I'd like to see is slightly higher up to here. I can cut this position and cut this position, take a little bit of profit off the table. Then we see some sort of pullback here, maybe a 50% retracement to the fib or something. Then we continue higher and I can look to rescale in here. So I've already booked some profits, reallocating back into the market. That would be pretty cool, but you know, that's in a perfect world. We'll see. What's up the clap emojis? They're not claps, they're waves. I'm meant to be continuously waving at you guys because I like you so much. I don't want you to ever think that I'm ignoring you. So I put some waving emojis in the thing under my name. Thoughts on Swiss yen? We did have some news for the yen, I think. Let me just have a very, very quick look. The yen is mildly weaker post-election as markets pricing continuity of fiscal stimulus and accommodative monetary policy under Takachi. At this time, seeing weaker yen short-term, but not broken yen. Further UK data. Okay. So yen is weak. I mean, Swiss yen, I think. I mean, it's difficult to sit here and say that I'm bearish because I'm not bearish in any way. So I'm finding it very difficult to really say anything other than being a buyer. The trend is extremely bullish. This is just a no-brainer trade. The only sort of thing here is how do you get in, because the pullbacks have only been few and far between. The only real chance you had was during the election, which obviously you may have caught, but it wasn't an easy trade or an easy entry to spot, really. So I think, yeah, possibly something like this on the next pullback, being a buyer would make sense. I'm fairly sure this is a negative swap market now, so if you are a buyer, you're gonna have to pay. I'm fairly sure. But yeah, it's pretty smooth. I would continue leaning on the side of buyers. Shutdown end this week is probably lying though. Yeah, to be honest, I don't really care what's being said unless it actually happens. You know, if it does open, great. If it doesn't, I don't really care. If someone says it's going to open, it still doesn't mean much, unless it's someone that, you know, is sort of in control, like Trump. But even then, I'm not sure that would hold that much weight. The moving averages, they are exponential moving averages. I've got a 50, a 100, and a 200. They're just really for gauging trends and pullbacks. Then I don't really use them as really a part of the strategy. You know, I don't wait for crosses to, you know, for pullbacks and things. It's more, again, moving averages here are all moving very nicely together to the upside. They're fanned out. So it just tells me the trend is pretty strong. So yes, being a buyer or buyers are in control. So being a buyer makes lots of sense. Euro dollar thoughts and dollar yen. Okay. I did take a short euro dollar actually. It was only a quick scalp, so I took profits. But yeah, I think euro dollar as well has room to go down. I'm still sitting pretty bullish on the dollar. I think the next thing for the dollar is watching for two situations. Either the dollar can reclaim sort of 99.5 towards 100, sort of this zone here. Once it does that, I'm saying once it does, because it does look very likely that the dollar is going to come back into this level or this zone. Then it's a case of, do buyers step back in? If they do, I would expect a range sort of within this, a range to form on either of these two lows, and then it basically just do this. Or we could reclaim and start coming higher. The reason I think that we could end up range bound is a little bit more likely is just because we don't have the data. You know, I don't think there's any data within the US for any traders to start pushing long-term trends, if that makes sense. you know, you could argue rate cuts are on the table. Yes, absolutely, but that's not new news. That's priced in. Other than that, what have we got? Well, we've got nothing. So we've got ADP. I think we've got, again, inflation on Friday, but yeah, I mean, what can you do? So in terms of euro dollar and dollar yen, I think being a seller on euro dollar does make sense, but with obviously very, very low risk managed positions. Dollar yen, I've got no interest. So I've been basically sitting on the same idea on dollar yen for the past couple of weeks, actually since the election. Dollar yen is the yen is at risk of intervention by the MOF. So I don't want to be a buyer, but I don't want to be a seller because I'm not necessarily bearish on the dollar, or I don't have enough bearish catalysts to make me go short dollar. So dollar yen for me is a complete write-off. There's no trade there. James, did you know in 19 something years ago, gold had a 9-week buy? After that, it sold heavy. Yes, that's exactly what I've been talking about for the first like 10, 15 minutes of my segment. Have I tried using the rainbow unicorn strategy? No, but it sounds interesting. I could go and back test it. Definitely not. So I'm in New Zealand US dollar still. I've been in this one for a little while. It's done nothing. So I'm kind of just waiting. It's not a large position. It's one of the positions I did initially intend on being a DCA. Sorry, I did initially intend it on being a DCA position. So I would just continue to add in. But it's not come high enough for me to warrant being or adding in another short. But I'm not also going to take a loss on this position here because it's not doing anything. So I need to wait for some sort of decisive movement. Either I could close it pretty quickly in a small profit and consider it break even, or if we end up going higher, I could start pushing it into a DCA position. But I'm not overly interested, so I'd rather cut it towards break even. Pound yen did have quite a large retracement. Actually, our entry point has been beautiful. We entered right here. So we got like a pinpoint entry, and it's just been used as resistance since. It's not had really any drawdown. So it's been very nice to sit in, but the issue is it's one of the markets I have to pay to hold this trade. So whilst it's actually just sideways and it's not in drawdown, I am losing money technically on the position. So it's just really a bit of a painful waiting game. And then again, we've got the S&P. But yeah, that's it. I've got nothing else going on. Again, in terms of commodities, specifically gold and silver, I'm just waiting. I'm kicking myself a little bit for closing this position. Hindsight always 2020, but it would have been beautiful to hold this trade, because imagine now it goes down to 4,000 and I could have been a seller since around 4,300. Would have been fantastic. But anyway, it is what it is. Silver's coming down as well. Actually, silver's coming towards the 4-hour 200 moving average, which could be maybe the first level of real support. So I think there's two situations here with silver. Either we reject right here because we did form this H4 wick, and this could just be, some profit taking, then we continue higher. That is option one. Option two, and again, this is more of me just spitballing technical ideas. I'm not saying that you should follow these and trade off them. But we could also see price come down to the 200 moving average, meet the previous low here, a little bit of these highs, and then maybe continue higher. I think the H4 200 is a relatively reasonable place to maybe look to be a buyer. But again, I think realistically, this might be the start of a larger pullback towards maybe 44, 42. Waiting for more of a drop. What on gold and silver? Gold specifically, I need to see a bit more of a reason to be a seller. So although yes, I've got the data, my strategy hasn't come into play. So this entry was, it was great, and it's one of those things that I sold pretty much the top of gold, fine, but there was no technical reason for me to really get in there, and the risk was so small that it didn't really mean much. Because obviously it was a high risk entry. Selling gold at the top, or what I thought is the top, is a dangerous game. So yeah, so as I said earlier, what I really need to see is some sort of pullback to form, first of all, a lower high, but also some sort of fib retracement. So whether it be 0.618 or 0.5, then yes, I could justify going in for a slightly bigger position at my normal risk. I can be wrong, but I think GJ is going to hit swing high. Maybe so. We'll see. Doesn't really matter. We're in the position. The fundamentals, as far as I am concerned, are in my favor. So yeah, I'm happy to sit through it. GJ is a hard sell. I'm looking for shorts too. Ball out says it's a sell as well. You know what? Maybe it is a buy. No, I'm joking. Anyway, okay. I've got about 5 minutes left, and then there is Marco coming to take over the show. So if there's any questions for me specifically, feel free to ask now or forever hold your peace, or at least hold it till tomorrow. So quick Edge Finder update. We have got NASDAQ as the most bullish reading. We've got the Dow actually matching the NASDAQ at 10. The Nikkei, I don't even want to look at the Nikkei. Dollar CAD. Oh, wait, dollar CAD. That's what I was watching as well here. And of course, I missed the entry. It's annoying. So with dollar CAD, I made a video on Sunday and posted on my Instagram saying dollar CAD looks like a great buy, 200 moving average, blah, blah, blah. Of course, I didn't take the trade. It gave me a second opportunity down here. Again, same setup, bounce off the moving average, bullish on the Edge Finder. Oh, I missed the entry again, but there we go. So dollar CAD, I think, is a good buy fundamentally. S&P, pound New Zealand, and pound Aussie. Did pound CAD drop off? I know pound CAD was there. Just bear with me. Let me refresh. Bashi, well, I've not seen you in a while. Bashi, how are you? Okay, so it does seem pound CAD has dropped off. So that makes me want to scrap the trade idea here. I'm going to keep it open, or I'll keep it on the watch list for a little bit, but likely now going to shift focus towards other things. Hold on. Is silver getting a bearish reading, or is that a bug? Let me just double check that. Where's Lee? I don't know. I don't think I've seen Lee in quite a while, actually. Surely silver's not getting a bearish reading, is it? No, it's not. Okay, it must just be a visual bug on the Edge Finder then. So ignore silver. We've got the FTSE, or the UK 100, with -7, Euro Pound with -6. Euro Pound was one I was watching as well, but the technicals are just very, very difficult to trade. So we're stuck on this H1 range here. There is nothing to do there. On higher time frames, yes, there is definitely an opportunity maybe for a mean reversion play, but it's tricky. I'm not really a huge fan of anything to do with Euro Pound, specifically the technicals at the moment. Thoughts on pound dollar? I would say pound dollar could come lower, but again, as I've been saying, my views on the dollar are very sort of flat. I'm slightly bullish, but I'm not bullish enough to warrant me expressing that idea with money on the line in the markets, really. So I think the UK is struggling. Their fiscal spending is unreasonably high. I think it's over 40% of the budget. The UK government is spending too much money, way too much money. I think there's some big issues in the UK. I don't think they're necessarily reflected in data. I've been saying this all year, and so far it's not really led to anything. But at some point, it might be in a month, it could be in a year, it could be in 2 or 3 years. But I think that we're going to have some serious problems in the UK economy-wise. So, yeah, I think pound dollar could definitely come down towards 1.32. If I was selling, that would be my target, just to see if we come back down to this low, make a double bottom, and then, whatever happens after that. Yeah, missed you too, Bashi. So that's pound dollar. Got about a minute left, so I don't think there's anything else for me to cover. It seems like Bitcoin's really struggling to have any type of recovery since we had the US-China situation. Oil's having a bad time. I would expect oil to come down towards 55. I think 55 is the next major level in terms of key numbers or psychological numbers. So in situations like this, like you could apply the same thing to gold and silver as well, because they're dropping. When you have a market that seems to just be on a sort of a rampage, it could be bullish or bearish. The way you can start to look for possible areas is obviously look to the left, look at previous levels. But if you don't really have that, like on oil, there isn't really too much. We've got this low here, which is actually quite nice towards 56. So that could also come into play. But another way to do it is just looking at round numbers. Round numbers are really, really good. Actually, they're a very, very simple way to just try and refine your entries, exits. So, for example, if you set a take profit, rather than it being a, let's say 63,464, just set it at 63 or 64. The markets generally will go to round numbers. Obviously, not every time. This is just a very, very blanket sort of tip, but it's useful. Anyway, I've just realized my time is up. So guys, have a good one. I'll speak to you tomorrow. I think I'm on tomorrow. Stay safe. Don't get margin called. Enjoy the rest of your days, and I will speak to you all very soon. Thank you for having me.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello, everyone. Let me see if we managed to set everything up. So, welcome to my segment of the stream. I do hope everyone is doing well. As far as I can see in the markets, the big news today is gold and silver. So gold is down minus 4.17%. Silver is down minus 6.49%. So is this the big pullback? Possibly. I told you a week or 2 weeks ago that gold has hit the mainstream media. Essentially, the news that it went from 3K to 4K in just a few months has hit the mass public, has hit the mainstream media. You can find news articles on it. Essentially, once everyone knows about it, then it's gone. Okay, then the whole explosion is gone, and it's pretty much too late to get in. So gold and silver have been looking like Bitcoin in 2018, Bitcoin in 2021, and we all know how that sort of price action ends up. It ends up in a massive crash and burn. So is this the time for the massive pullback? Maybe. I'm looking to buy. I'm looking to actually get in. I'm looking to buy the dip. Some of the levels that I'm considering are let's say this level of support, and it all depends how aggressively we come crashing lower. Okay, essentially I have some levels I'm looking at, but if we just run straight through these levels, well, then I don't see a massive reason to get in. I think it's much better if we see some sort of a rejection at those levels, then I will definitely consider getting in. So far it does look, you can say, promising if you want to be a gold bear or a silver bear, because the daily candle is quite big. Usually the market takes a few candles to go up and very few candles to go down. So usually uptrends are more stable, and then the actual downtrend, the pullback, the sell-off is absolutely massive. So that's basically the star of the show for today. The NASDAQ just reached all-time highs today, and then it started to pull back. But of course, the pullback is nowhere near the size of the pullback on gold and silver. So USD CAD is a buy limit I have in the market, so still I'm not in, still didn't tag. Euro CAD is a position I'm already in, so this is a trade now. It's running around break even. And Euro Swiss is another one that we heavily discussed in the A1 Discord. So this is a hot Forex pair, especially at this level. And the reason is the 0.92 level, as you can see right there, is possibly a level where the Swiss central bank will do an intervention. Essentially, they will come in, they will try to bid the price higher, they will try to bounce the price back to above 0.92. So that is kind of the policy that they have. That is the policy that they use. How can we trade it? How can we use it as a trading edge? Well, we can essentially buy at this level. So that could be a play. You can execute buy setups at this level. Am I going to do that? Maybe considering how we enter into that level. So we still haven't broken this swing low. What I would like to see is, let's say, a big candle and then some sort of a rejection to the upside. Then I may get into an initial buy position. Not massive risk, but could be worth a shot to the upside. Okay. So for the Euro Swiss, it is on the watch list. I'm closely watching it. I would like to see how it reacts in this level. I have also done some research, some reading, and the month's end for Euro Swiss is usually negative. So usually the last few days of the month, Euro Swiss loses value. That doesn't really go well with my theory to buy the dip, to buy this level, because we are approaching the month's end. Today is the 21st of October. We still have a couple of days, but once we do go into this area, it may be like the 25th, 26th, 27th. That is kind of the month's end, which may mean that there is an extra confluence to actually sell the Euro Swiss. So we're getting some conflicting signals. But it's an interesting trade, interesting, let's say, proposal for a trade. And I will see how this one develops. Forex calendar this week, the news that has printed, we had the New Zealand CPI came in a bit higher than the forecast. We had CAD CPI, which came in higher than the forecast. So that actually came today. Interesting. So that is not good. That is not good. I mean, it is kind of good for the CAD, but for Canada as an economy, not the best. If we look at the short-term data for Canada, you can see actually short-term data, 62.5% of the data is coming out better than expected, although long-term data is pretty bad. So if you look at the CAD, kind of the GDP is all over the place. If we look at the unemployment rate, rising unemployment, so currently at 7.1%, and I think this is the worst thing. So this extremely high unemployment is really, really bad, okay? And now we are getting inflation. So CPI, I think it was CPI that came out. Yeah, it was CPI for the CAD. 2.4% apparently, okay. Okay, 2.4%, which is pretty problematic. Now, you're getting inflation above target. So inflation is above 2%. You're getting GDP that's kind of all over the place. You're getting unemployment, which is super high at 7.2%. That scenario is called stagflation, okay? So we may have had a bit of bullishness in the CAD for today. The CAD maybe gained some value, but I think overall we're in a massive stagflation. So I would say overall we're in a massive stagflation scenario, which should be negative for the CAD. That is why still my favorite things to do, even with this hot CPI print, is to buy USD CAD, buy Euro CAD. We may actually hit my level. So we may hit my buy limit at 1.39864. and then I would be, of course, in a trade. Hopefully we do actually reach that level. Rest of the news, I'm watching at the US core CPI numbers. They're coming out this Friday at 14:30. They should be pretty important. Okay, so these numbers should be pretty important. The reason is, if you look at the Fed, if you look at what is priced in terms of rate cuts, 2 rate cuts are already priced in, 25 basis points in October, 25 basis points 25 basis points in, let me just see, December, right? So it is tough for the Fed to get more dovish, while it's pretty easy for them to get more hawkish. So if the CPI print comes in hotter than expected, that could produce a hawkish reaction from the Fed, or could produce a hawkish expectation. And in theory, it should make the dollar gain value. So in theory, it should make the dollar actually raise in value. And today we are positive on the DXY, so pretty good. I actually would expect a bit of a hotter CPI print from my research, from the reading I've done. I think this CPI print may come in hotter than expected. So I think DXY could rally into Friday. I think the dollar could gain value into Friday. That could be a trade. That could be a trading edge. Again, unfortunately, I'm not yet tagged into my USD CAD position. I will consider getting in on with a market order with a bit of a smaller risk, just to be in ahead of the CPI. The reasoning is the Fed is mostly dovish. Most of it is priced in. It is tough for the Fed to get more hawkish. If there is a hot CPI print, the dollar should gain value. Okay, so that's basically the most important news for this week. And your question maybe, isn't the US government shut down? How is the core CPI coming out? Well, the BLS, the Bureau of Labor Statistics, has decided to release the inflation number because it is a very important number for the economy. So they have gotten together and they are actually going to release this number. At least we'll get some data, okay? And if you guys want to get the edge finder, if you want to do this analysis that I just did for the CAD, so I told you short term, it seems bullish, but long term, it seems like a massive stagflation scenario, especially with this unemployment. I mean, relative to other economies, this unemployment is super high, super crazy. So if you want to get the edge finder, you can do so with my discount code, which is MARKO. Okay. Also, if you want to get trade signals, trade analysis, trade breakdowns, fundamental event breakdowns, you can join the A1 Discord. There's Nick, Chris Palver, Iwind, me, lots of other successful traders, and you can get a discount with this code as well. So Edge Finder, A1 Trading Discord, you can get a discount. You can trade with us. Both of these setups were a signal in the A1 Discord. Now, let me check the comments. So I can see the comment counter here in the top right. There is 108 comments. That's much, much more than usual. I'm guessing it is because of this. I'm guessing it's because of the massive sell-off. A lot of you have jumped on the live stream to see what's happening. And essentially what is happening is this has become a massive momentum trade. Okay, massive momentum trade. So the fundamentals pushed the price up initially, and then it became a momentum trade. Then it started attracting a lot of eyes. Then it started attracting a lot of speculation, and it became basically a bubble. It became Bitcoin. So something that moves in this erratic fashion, explodes to the upside in a very small amount of time, eventually runs out of steam, and eventually there's a correction, there's a big pullback as there are no buyers left. So if you're the last buyer, you're stuck right here at the top, okay? And then essentially there's no more buyers, sellers start taking their profits, and this happens. So this can only be explained by greed, I would say. Greed by speculators, greed by retail traders greed by people sitting on the sidelines watching the news, seeing gold is at 4,000, and them basically going into the market and buying. So it's very, very simple psychology. There's no clear fundamental. There was initially a fundamental, let's say, reason to buy gold right here, which I did unfortunately miss. But the reason was high inflation in the United States and then rate cuts into that inflation. So if you go to the Edgefinder CPI and you look at the US dollar, you would actually see that the inflation is 2.9%. That is pretty high. So that is pretty hot. And the Fed was going to cut rates into that high inflation. That sort of was a signal that there will be even more inflation. And what is the best way to protect yourself against inflation? It is to buy gold. So gold exploded up initially because of a fundamental reason, and then all the speculators started to get in, all the Bitcoin, let's say Bitcoin folks started to get in, and this started happening. Let me now take a look at the comments. I'm not sure how effective that will be because, again, there's 120 comments. Let me see if I can quickly run through this. So hello Ballout, hello Bashi, hello Joshua, all of the regular guys. Okay, let's see. Marco, say taco once, please. Okay, you got it. Taco trade signal. That's done. So if you manage to buy the dip on the NASDAQ, that was a pretty good, clean trade. If you managed to buy the dip on the sell-off, it would have worked on the NASDAQ, but on Bitcoin, not so much. Unfortunately, on Bitcoin, it just kept going lower, the taco trade. So if you bought the dip on Friday. Euro dollar. I'm loving that sell-off on gold and silver. Can't wait for a perfect setup long. Me too. I'm with you. I'm looking for buy setups. GBP/USD, Euro CAD. Okay, so we have we have some requests. Euro dollar. I mean, I look at this chart, and like my question is, what do you see here? What do you see here that is interesting? For me, it's just super flat on the daily chart. It looks very, very flat. It looks very range bound. It's just channel going into a channel. So for me personally, as a trend trader, I don't see any opportunities right there. Okay, Euro is kind of strong relative to other currencies. The dollar is also strong. I would say right now the dollar is my favorite currency to buy. If we look at the short-term data, the Eco Surprise Meter, okay, the euro is not so great right now. The dollar is, but I'm combining short-term data and long-term data as well. So that is important to mention. Anyway, euro dollar, I don't see a massive edge. Technical analysis, super flat, super range bound. GBP/USD, I tried to take a sell setup. It was on OAND data. Yeah, I tried to take a sell setup. Unfortunately, I got taken out for a loss. And I would say we're back in the range. I would say we're back being super flat. So for the pound, I'm super bearish. I heard James before me as well talked about the pound, talked about the UK, talked about the massive debt issue, the massive debt problem. Well, I have the same opinion. I'm super bearish on the UK. I'm super bearish on the pound. My two favorite things to sell right now is the CAD and the pound. Okay, worst currencies or worst economies. So GBP/USD is back in this range. What I was counting on or looking for was a break lower and then for a nice downtrend to start. So yeah, that was the basic plan. Didn't happen. now back into the range. I cannot do much. I'm being more patient. I believe there's better opportunities out there. Which ones, you may ask? USD CAD, Euro CAD. Okay, both of them to buy. Did you take Euro Swiss finally? No, I did not. I didn't take it because I'm still kind of waiting for. Look, this is not something I definitely want to take. It is just something that is interesting to me. So it looks cool. I think there's possibly a decent trading edge behind it, but I'm not yet sure I want to get in. So what I would like to see is a proper rejection of the level, proper rejection of the area. Nice huge wick, nice blue candle after that. Then maybe I can get in, try to play for a 2-to-1 reward to risk, something like this. Okay, but right now we haven't really had a massive reaction. Okay, the wick, see these huge wicks. I would like for this to possibly happen again right here. Okay, so I'm not in. I'm not actively looking to get in. I'm waiting for the price alarm to hit. Then I'll see. Sure, glad I didn't buy silver right now. Any insight on metals? Well, as I mentioned, psychology is the main driver of this market. We had a massive frenzy of buying. We had a massive FOMO from investors who just started to buy like crazy. Now we're getting the sell-off, possibly starting to get the sell-off, possibly starting to get the exhaustion. And this may be a start of a bigger downtrend, a bigger pullback. My game plan is to essentially buy the dip. Okay, so yeah, game plan, buy the dip on silver, buy the dip on gold. I'm looking at levels. If we just run straight through, so if we just melt like this, well, that will be a problem, and that is not really great. What I would like to see, as I mentioned, I would like to see a proper rejection of an area, kind of slower price action, and then I would probably consider getting in on a buy setup. So I do want to mention today's sponsor, right? And silver is just continuing to melt lower, just hit the 20 MA, which should maybe be a little bit of dynamic support. We will see. Anyway, sponsor of today's video, DNA Funded. If you guys are looking to expand your trading capital, if you guys are looking for a reliable prop firm, make sure to check out DNA Funded. Now, they are reliable, they are respectable, they are being ran by professionals, but the best thing is the price. So there's a couple of reliable prop firms, but with our discount code, which is A1 Live, okay, so A1 Live, you can get 25% off any of the DNA challenges. So this discount is especially for you guys watching the streams. 25% off any of the challenges. That gets you a very competitive price. This is, by the way, my 50K account that I'm using to test my ChatGPT trade signals. Currently, we are around, we are a bit negative. We're just running around break even. ChatGPT cannot seem to get into any profit, which is pretty interesting because in the last 3 months, it made like plus 23%. So maybe it has to do with the different market conditions on the S&P, because lately we have been kind of more flat. So most of the price action before that was sideways up, which means push up, sideways, push up, sideways. Now there was a big sell-off. We're being flat, so maybe that's the reason. Doesn't matter. I will continue testing, and yeah, if you want to check it out, 25% off, A1 Live. Let's get back to the charts. UJ is another one I want to look at. So USD JPY actually higher for today. That is interesting. UJ, I was looking to buy it last week. I most likely would have been stopped out. I believe this candle would have stopped me out. I had a buy limit set somewhere here, so I'm not sure how big my stop loss was. Anyways, so I had the trade in. I thought about the yen. I noticed I don't really have a clear bias on the yen. I don't really have a clear picture on the yen, so I did decide against taking this trade. The problem with the yen right now is you have a dovish prime minister and you have a hawkish central bank. So they are kind of in a clash. They're kind of in, let's say, a fight. Who's going to win? No one really knows. One thing that I've noticed in my research during Asia session, we have switched to net selling of the yen to actually net buying of the yen. So the players in the Asia session have started to accumulate the yen instead of selling it. That may be a good sign for the yen. The USD yen chart is still pretty unclear to me. I'm not sure if it's better to buy or better to sell. I have reasons for both, so I can find reasons to buy UJ. I can find reasons to sell UJ as well. So for this chart, I'm being more patient. Crypto, Bitcoin, and Ethereum. I mean, Bitcoin is just kind of in the dumps. So overall, it's flat, it's corrective. No real movement up or down. The taco trade didn't work. So the taco trade, as I mentioned, was on Friday, where you could have bought the dip after the crazy tweet from Trump about very high tariffs on China. On Bitcoin, it would not have worked. You would get stopped out, most likely. Am I bullish? No, not really. So as you can see, I have my alert set, and until we cross that alert, so essentially until we get back to the all-time highs, I cannot do much. So what I'm waiting for is this. I want to clear this area. I want to clear this flat range, and then I would be interested in potential buy setups. Of course, if we do start to pull back on the NASDAQ, that's not a good case for Bitcoin, because Bitcoin usually acts as a technology stock. So we will see how that will develop. So the NASDAQ, on the NASDAQ, we have recovered pretty quickly. So we're back into the all-time highs. It looks pretty good still. I would like to get a pullback, if I'm being honest. I would like to get a bigger pullback than we had on Friday. If we can maybe revisit this level of support, or maybe go even lower to, let's say, this level of support. So that would be pretty high probability. Until that happens, I cannot do much. Of course, I'm not gonna buy all-time highs. It is not my trading style. I want to get a pullback. Let me check the DAX. The DAX is super flat. Doesn't look interesting at all. Oil, as far as I saw, oil just keeps on going lower. So oil just keeps on crashing. We are sort of approaching the support level right there. This is pretty good for the prices at the gas station. As far as trades go, for me personally, oil and copper are pretty tough things to trade. So oil and copper, very much impacted by geopolitics. There's a lot of choppiness going on. There's a lot of erratic, very quick movement, as you can see right there. Let's say, as you can see here, especially copper looks pretty crazy. Oil keeps on going lower, which kind of makes sense. That's why I like the Eco Surprise Meter, and I like this Global Economic Surprise Score. So essentially, if you want to trade oil fundamentals, it's all about the demand and the supply. So if the world economies are doing well, oil should appreciate in value, because there's more spending, there's more travel, there's more buying of stuff, so there's more transport, okay? And the worse the world economies are doing, there is less transport, less buying, less demand overall, so the price of oil goes lower. Well, we're kind of in the red territory. I mean, we're close to it. We're at 42%. So I would say we're definitely not bullish. We're definitely not positive. What this score does is it basically adds adds up all of these numbers. Okay, adds up all of these numbers and puts it into one gauge right there. So if you want to trade US oil and you want to use fundamentals, this global economic surprise score is pretty good. As you can see, we have steadily been going lower. Okay. Now the problem for me personally, why I don't prefer trading oil, why I don't like trading oil, it's just very much impacted by geopolitics. Okay, very much impacted by geopolitics. Okay, gold meltdown saved my fund account. I was 1% to blowing the account. Well, I highly recommend doing proper risk management. Okay, if you were so close to blowing the account, but if you followed your plan and if you had proper risk management, then that is good. But if it's only one trade that basically made you blow the account, that's really bad. So if one trade can blow your whole account, funded account, that's it, not a personal one, but a funded one. So let's say 10% drawdown, that's definitely not called proper risk management. So I would highly advise lowering the risk size and assessing. So I followed my plan. Gold has made me pass. Okay, so if you're following your plan, if you had multiple trades that basically brought you close to breaching the rules, then that is all right. But if you take one trade and suddenly you're down minus 9%, that's pretty bad. That's not proper risk management. And now we're down minus 7.66% on silver. So silver just keeps on melting, gold melting as well. A very, very strong move down, very large candle. Do I want to catch the falling knife? Am I looking for a buy setup if we just run through my levels? No, not really. So I would like to see the price pause first. Yeah, this is just a straight meltdown lower. So this is just kind of like a falling knife on the 1 hour chart. Looks pretty bad. This can go down a lot. So the quicker we go up, the quicker we go down. Okay, that's how it happens. If there is an explosion to the upside, there's probably going to be an explosion to the downside. Best case is Bitcoin. So Bitcoin, if we go to see, so 2021 and explosion lower. We go up, we explode lower. Then 2018, see, so massive correction lower. Actually, this one was a bit slower. Well, it first began with massive candles, and then it kind of went flat, printed a triangle, went lower. Essentially, gold and silver have started to act like Bitcoin. That is never a good thing. That means that these prices have attracted some people in the market that shouldn't really be in the markets. Those people have very weak hands, so they usually buy the top and they sell immediately. So on the first sign of panic, they will be the ones selling. Okay, they will of course lose money, but their selling will probably, as it pushed the price higher, it will push the price lower. So I think there is a very high chance that this is the start of a massive meltdown, massive sell-off. Be careful what happens. Don't catch, this is just my advice, but don't catch falling knives. First see if we can get some sort of a rejection to get in on an eventual buy setup. As I mentioned, I'm definitely looking to get in. I want to buy it, but I want to get a cheap price. I want to get a discount, and I want to get in using a smart approach. Drawdown is normal in trading, whether you follow the plan or not. Yes, but losing 9% on one trade is not normal. At least it shouldn't be normal. That's too much. Losing 9% on 9 trades, that is proper risk management. That means you risked 1% per trade. Where would you buy gold, silver, Marco, or would you wait for consolidation now? Well, I have some levels. This is going to be probably the last question for today, but I have some levels. I mean, this level of support, they're not really clear levels. What I don't want to do is I don't want to catch a falling knife. as I mentioned, so I don't want to see this and just buy like crazy. Not really the best decision. But if we get some sort of a reaction at these levels, I will be buying. Of course, maybe initially getting in with smaller risk and then increasing the risk size as we go. Silver. We are actually kind of approaching my initial level that I had in mind, but we approached it so fast that I think I'm not going to get in there. So, I mean, it's just basic support. Here. Free small positions, try to get in, try to go back to the all-time highs. That's the game plan. Of course, if I take any of these trades, you will be notified in the A1 Trading Discord, which I highly recommend you join. You can get a discount with my code, which is MARKO. All of the links, all of the information is in the description of this stream. Okay, so gold is dropping like crazy. It is. My 0.03 lots is tanking gold. Well, so looks like you're the culprit for the sell-off. Maybe you can buy 0.06 lots, push the price back up. It's not one trade. That was my 8th trade. Then that is okay. Losing more than 1% isn't normal. Well, it depends on how you structure your prop firm challenge, but losing, I would say, more than 2 to 3% per trade is problematic. That is about it. Thank you guys very much for watching. You can catch me for the whole week. I will be here streaming every single day on Trader Nick and A1 Trading. I'm watching silver. I'm watching gold, watching the pullbacks. I want to get in. So let's see if I can get in. If you want to get the updates, join the A1 Discord or follow me on the live streams. Thank you. See you in the next one.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.